Hello, everyone. I just want to introduce myself. I'm Valerie. I am the President CEO of the American Canyon Chamber of Commerce. I've partnered today with Paul Hicks from Payroll Masters. He's going to be doing a presentation on how to fill out the PPP application once you've received your federal funding. It is an 11-page application and it's a little bit in depth, so I'm really glad that you chose to come to this presentation today to make sure that you get all your information filled out correctly. Paul is going to explain a little bit more about how he is going to run the meeting. I just want to make sure that everybody keeps their microphones muted throughout the presentation. And if you have questions that you'd like to ask, you're welcome to put them into the chat feature. And then Paul will be getting to the questions as time permits. So I just wanted to say thank you for joining. Thank you for signing up. And if for some reason you did not register for this event today and you're on the call, can you please put your email address into the comments so that we can make sure that we can have communication with you to send the video out after the presentation. Thank you very much, and we appreciate everybody joining today. I'm going to pass the floor off to Paul Hicks.
You need to allow me to share my screen.
You should have the rights to do that, Paul. If it doesn't let you, let me know and I'll double check it, but it should be set up for you to be able to share your screen.
Host disabled participant screen sharing. Be a lot more fun if I can actually show.
Yes, a lot more fun. All right, give me just a second over here to do this really quick. I'm not sure why we don't have that capability. If you want to start talking, Paul, if you don't need to show your slide yet, I can make sure that this will be happening in just a minute.
Can you hear us now?
Yep.
It says it's allowing it to share. I'm not quite sure why it's not letting you share the screen. Let me change you to the host and see if that will help.
Okay.
But I'm not going to be able to admit in the waiting room once I'm the host, so I will.
Okay, I'll keep an eye on it.
You keep an eye on it.
I'll try.
Okay.
Huh. Testing. Hello, are we heard?
Yep, we got you. We're gonna mute you.
Thank you.
All right, looks like we are good to go. So Valerie, how do we want to mute everybody?
Yep, mute all.
And I've got to let somebody in from the room. Okay, so I think we're good to go. Everybody give me some nods, say we can hear me. Everybody can see my screen.
I can hear you. I got something on the screen. I'm not sure. Okay.
And Val, can you mute, or do I need to do that now?
Got to mute, but I'm going to just work a little bit on my side for a second. Hopefully I'm going to be able to fix this so that I can come back as the host and you don't.
Okay, cool. All right, everybody, welcome and good afternoon. My name is Paul Hicks. I'm with Payroll Masters, and we're going to talk about the PPP loan forgiveness application. And I need to say right up front that this is actually as of 5/22, which was last Friday when the interim final rules came out. The actual application came out on 5/15, which was Friday, and they came out with the final rules a week later. So we're really working on about 10 days worth of current information. Keep in mind that this is a very dynamic situation. Things are changing literally by the day. As a matter of fact, just today, the House of Representatives just voted on a bill that changes a whole bunch of stuff. Although, you know, the House has signed this, it's not gone to the Senate, and it's not been signed by the President. So this is all, you know, breaking news. But what it does is change the 8-week window for the covered period to 24 weeks. increases the limitation from the 75-25 limit for payroll to non-payroll related expenses to 40-60, extends it from June 30th to December 31st. It extends the loan terms from 2 years to 5 years. And then there's some tax implications too. So anyway, this has been passed by the House. It's not been through the Senate yet, and it's obviously not been to the President. But there are changes coming even as we speak. So that said, I need to tell everybody I'm not a lawyer, I'm not a CPA, I don't have a insurance license. So this is presented for informational purposes only. So let's dive right into this thing. This is actually language that came directly out of the interim final rules. And the reason I'm pointing it out is I found it interesting that the Treasury is saying that they are taking steps necessary to maximize eligible loan forgiveness amounts, and they are hoping that borrowers are going to take immediate steps to maximize the loan forgiveness. So the intent as expressed by Treasury is to make this as easy as possible for the borrowers, but we're going to see that that's not necessarily the case. So what did the new application do? It actually defined a bunch of terms that we've been waiting to get more clarity about, and specifically simplified the 8-week cutoff window that you have to use, or 56 days that you have to use the PPP money for. And that 56 days would normally start on the day the money was funded by your bank. The loan application and the guidance have actually instituted what's called the alternative payroll covered period, which means that if you have a biweekly or more frequent payroll period, you can use the first day of the pay period following when your loan was dispersed as your start date. It also addresses incurred and paid. When is the expense actually incurred and when does it get paid to the employees? And it establishes that if the employee worked during the covered period but was not yet paid, as long as they're paid by the next regular payroll date, that would be forgivable. And it also clarified what could be included in the non-payroll related costs and how those are handled. So the biweekly thing, I think it's pretty straightforward, but if you have a weekly or a biweekly payroll, you can use the alternative covered period instead of the day that the money was funded to the bank for your covered payroll costs. And even if they don't fall directly within that 8-week window, you can cover that. You can consider that as long as they're paid by the next regular payday. So, and it clarifies also that payroll costs are considered paid on the day that checks are distributed or that an ACH transaction has been initiated. And they've given us a handy example in the interim final rules, and you'll see here that using a biweekly payroll schedule, if they were funded, period begins on June 1st and ends on July 6th, and the period starts on June 7th. The 55 days for a total of 56 days pushes this all the way out till August. Now that becomes important because they've also clarified terms of when the SBA and the banks are required to give you guidance about whether or not the loan has been forgiven and actual forgiveness. And that racks up a whole bunch of time we're going to get into later. It also defined full-time equivalents to mean 40 hours, which is important. There are two different ways that we can actually calculate full-time equivalents. You can either do it by the simplified method as was spelled out in the application itself, or it can, which basically counts anybody that does not work 40 hours as 0.5 full-time equivalents, or you can do the actual divide 40 by the number of hours the employee actually worked to get your ratio. It also clarified that $100,000 rule for highly compensated employees means that in that 56-day window, you can pay those employees $15,385, and there's no need to actually calculate it on a weekly basis. Oh, and I'm seeing that the chat room is already lighting up and we're just getting started. Oh, good. Valerie's in on it. Okay, thank you. So Valerie, are you going to throw the questions at me or you want me to try to keep an eye on this?
If you can keep an eye on them, great. If I see that you're getting behind, then I'll just let you know that you've missed one or fill in where you have missed behind.
Okay, cool. Okay? Thank you. So the application itself also confirms that the magic June 30th date for two different purposes that's going to apply for your full-time equivalencies. As long as you get your full-time equivalents back up to where they were on February 5th, on the period that includes February 15th, you're golden. And also, as long as you've not reduced employees' wages, or if you had reduced employees' wages, you have until June 30th to get them back up to where they were before all the world caught on fire. So it also creates a safe harbor for certain FTE reductions outside control of the borrower. And this was actually handled originally in Treasury's FAQ. So if you've not seen it yet, there's a link in here to the Treasury's PPP FAQs, and they're very important. We need to pay attention to them. And basically what this rule says is that if, for example, you have employees who are out on unemployment and with your PPP money, you have tried to bring your employees back, but they decide that they would prefer to stay on unemployment, or for whatever reason they do not want to go back to the workplace, you don't get penalized them for full-time equivalency. There's a caveat though. In the interim filing rule, not only do you have to have documentation, which we're going to get into, saying that you did offer the employee the job is available, and the employee decided not to return, you also have to let the applicable state unemployment office know the fact that the employee has, I lost my slide. There we go. That you have to notify that the unemployment agency that the employee has refused to come back to work, which has implications for the employee's unemployment status. Although I think in California, I don't think it really matters. I'm not an unemployment guy, so in the meantime, we have a question. Okay, so the question is, our payroll is paid twice per calendar month, semi-monthly, so it doesn't equate exactly to 56 days. Do we need to apportion pay so that it equates to exactly 56 days, or use the full 4 payrolls? No, I think we're going to proportionately allocate those 56 days is the way I'm interpreting this. So the interim rules also spelled out specifically a couple of things that are important to everybody. And that is that hazard pay and bonuses are eligible for loan forgiveness because they constitute supplemental wages or salaries. Now, I have seen analysis and comments that you want to stay within the reasonable and customary arena. So you can't just, and the number that I've seen is 25%. So I don't know if I would actually call that law, but you want to, if you're going to offer your employees, a bonus for hazard pay, or just for just non-discretionary bonuses, you can do that, and those loans will get forgiven, or will probably get forgiven. So again, all of this comes from Treasury's FAQ number 40, and you'll see that we have here have the document linked directly from the slides. So it also clarified and simplified the application of the 75-25% collar. And it made it easier for us to calculate what the loan forgivable amount will be. And it's done by dividing your total payroll cost by 0.75 or by 75%. So, and we're going to go through all that in just a second. It prohibits, so owner operators are eligible to participate in the PPP program. And this specifically spells out that owner compensation cannot be increased above 2019 levels. So if you're a Schedule K or Schedule C filer, you use your 2019 earnings, and you can only use $15,385 of that for your PPP loan. I mean, I've actually gotten some comment from banking friends that it actually gets a lot more complicated than this, and it's all based on tax returns. So we're going to require the banks are going to require tax returns to be able to back all this information up. Now I'm seeing some chat questions, so I'm going to try to run these the best that I can. So I'm gonna go backwards. Are owner retirement contributions, simple IRA bonus eligible for forgiveness, or they're prorated for the 56-day period? I'm not sure about that. I know that the employer portion of any employee's retirement plan contributions are eligible, but I'm not sure if that applies to owners. I would assume so. There's another provision that says that you're only that $15,385 amount only applies to cash compensation and not to other eligible benefits. So I would guess that probably owners 401k or simple IRA would probably be eligible. What if you run out of money? Well, your loan is the loan amount. So now the whole idea is to get as much of the loan forgiven as possible. And one last question, what if you have a weekly and a biweekly payroll? I'm not sure I quite understand that, but if you're running two separate payrolls, you would still, in general, when we see these, they typically have the same payday. So it would just be a separate pay period. And I'm guessing you would probably want to use the alternative payroll periods to make it line up with your weekly and biweekly pay periods. I hope that answers the question, but I think I'm on the right track. So back to the loan application and the interim final rules. It does, the loan application specifies specifically what information needs to be kept, needs to be provided to the banks, and what information needs to be kept by the borrower and for how long. So remember I said that there was timing issues. In the interim final rules, SBA Treasury has spelled out specifically that the lender has 60 days from the receipt of a completed application to issue its decision to the SBA of how much they would determine the loan should be forgiven for. Once they've done that, SBA has 90 days whether to render their decision back to the lender. So what does that mean? Right off the top, we've got 150 days. If you add in the 56 days of the length of the loan, length of the program, now we're at 206 days. So you'll remember that the PPP loan itself, everything is based on funding date, and you have 2 years. It's a 2-year note amortized over 18 months. So the first 6 months are automatically deferred payments by the SBA. What I'm thinking of this and what I'm hearing from some of my colleagues is that in all likelihood, it's going to be very common for borrowers to end up having to make payments on their PPP loan before they ever find out whether or not the loan is going to be forgiven. However, they also did clarify that if you end up making payments and the loan is forgiven, the lender is required to pay you back. And I'm getting some questions also in the chat window, so sorry if I'm getting a little distracted. On weeks 7 to 8, if we don't have enough money to pay all the employees, how do we distribute it? I can't really answer that question. You can, if you have people on payroll, you're going to just pay your employees. I think we're going to have to, some of these questions I think are going to have to be clarified specifically how it is that, what it is that we're trying to answer. So for the loan application process itself, there are some key dates that you're going to want to have at your fingertips. Specifically, you're going to want to know what your PPP loan disbursement date was. You're going to want to know what your covered period, what the covered period is that you're using for your dates, which is either the loan disbursement date or your alternative payroll date. You need to remember February 15th for non-payroll related costs. And we're going to get into those things too, but February 15th is a very important date. You have in general, you have two options to determine your starting number for your full-time equivalents, either February 15th, 2019 through June 30th, 2019, or January 1st, 2020 to February 29th, 2020, unless you're a seasonal employer, in which case you can use an additional full-time equivalent measurement period from May 1st through September 15th, 2019. So, and then the salary wage reduction dates are the same. And remember the magic June 30th date, that if you need to get your full-time equivalents and your wages back up to where they were in the period that includes February 15th by June 30th, 2020. And remember, this all is subject to change. I mean, literally the House signed its version of an extension, a couple of hours ago. So The actual PPP loan application, forgive me, I got to move my screen around a little bit. It includes basically 4 parts. So you're going to have the Schedule A worksheet, the Schedule A, the calculation form, and then which also includes the representations and certification attestation page, which is important. I'm going to show you what all these forms look like. And the last form is the borrower demographic. The U.S. Chamber has also put together a really handy little guide that walks through this in very quick bullet points. So what's the order of filling this thing out? The first thing that we need to do, besides downloading the actual form, is read the instructions. As Valerie said, this is an 11-page package. The actual application is 5 pages, so the instructions are the additional 6 pages. I would also very much like for you to download and read the interim final rules, and also read the footnotes, because they include lots of important information. Once you've read, this is just like high school when you had to take that ugly test. You know, the first thing they tell you, read all the instructions before you start. And it's really going to make your life a lot easier if you read the entire package first. So the steps are then, once you've done that, you're going to complete the Schedule A worksheet. The Schedule A worksheet is going to translate directly to Schedule A. Schedule A is going to inform you of the numbers that you need to fill out the actual loan forgiveness calculation form. You're going to sign the attestation page, and then you can fill out the optional demographic information form. So this is what the forms look like. This is the Schedule A. Again, I'm doing these, we're actually approaching this backwards. So in general, when you look at the application, this is the actual application form, the first page. And then here's the attestations and certifications page. And you're going to notice that, you know, this is some pretty serious stuff. They are asking you to certify that all this information is correct, you're not committing fraud, and there are serious penalties included in here if you were to intentionally do something incorrectly. And this is important because Treasury, you know, remember that very first slide that I showed you that said that they were trying to make it maximize the amount of loan forgiveness for the borrowers. And my read of this is that this certifications page is basically giving the banks more license to basically work with the information that's provided by the borrower and to rely on that information for their loan forgiveness decision. So again, we're going to start with the last part of the package and fill out this PPP Schedule A worksheet. From here, we're going to fill out the Schedule A. Then we're going to fill out the loan application form, sign it, and initial all the areas that need to be initialed. And then the last part is the borrower demographic information form. I think this is really important because there was lots of noise early about the perception that some of these PPP loans were not being distributed equitably. And I think it would be, I think it's good for us to get information to know whether or not that was true or not. So we have some more questions in the chat window that I'm going to try to get to while we're going. Do I know if we can hire someone to help fill this out? No, I don't know that in particular directly. I think you're maybe asking if you can hire me to do this, and we're not sure about that yet. But I'm guessing that there's going to be lots of help available for people to fill these out because it is complicated. Does the FTE calculation date need to be in the same period you use to apply for the loan? So in general, you have to be consistent the way your FTE calculations are done. And we're going to go over some of that in just a bit. That question is a little trickier, and I'm going to defer it for a few minutes until we get to the front page of the form again. So, and there's another one that came in privately that I don't want to bring up in the overall window. Okay, so moving on. Here is the worksheet that we're going to start with. And so you're going to notice there's only what, 8 lines here, and most everybody's going to have more employees than they're going to have to fill out this sheet. So yes, you're going to provide supplemental information to the banks and the SBA and for yourselves. When you fill out this form, we need the employee's name. The employee identifier is the last 4 digits of the employee's social security number. The next box is their total cash compensation. The next is their average full-time equivalency amount. And remember, this is for the 56-day window. And the last is the wage reduction. Now you're going to notice that the wage salary or hourly wage reduction amount. This is not going to apply to a whole lot of people, and we'll talk about this in just a few minutes. And you'll notice there's a similar box down below it. This is for any of those employees who make more than $100,000 a year are going to be included here. You'll notice that, well, in general, you're going to have the same information, right? The employee's name, their social security number, last 4 digits of their social security number, their cash compensation, which is, remember, is going to be limited to $15,385. And in general, these highly compensated employees are going to average, they're going to be 1 full-time equivalent. And the bottom of the form is the full-time reduction safe harbor, which we will touch on. I'm not going to go too in depth about that one in particular. So, and what I'm doing here is I did a little cutout of the Schedule A, and this is to simply show you why we're doing things the way that we're doing them. You'll see that in the PPP Schedule A worksheet, box 1 drops directly to line 1 on the PPP Schedule A. So your total cash compensation is going to be the total cash compensation on your worksheet is going to be the total cash compensation that you're going to use for the PPP Schedule A. And again, you have 2 different ways that you can figure out that you can use for your full-time equivalency. You're either going to use a raw proportion, which is the number of hours divided by 40, or you're going to use the either a 1 or a 0.5 for anybody that works less than 40 hours. So, and you know, each client, each borrower is going to have to decide which methodology works best for them. And yes, timing matters. So, and as one of my banker friends said, you know, some of this is going to be a little tricky when we start turning in these forms. Okay, so the salary or wage reduction. This box really is dealing with companies that said, for example, okay, you know, times are bad right now. We need everybody to take a salary cut to stay open. So everybody's going to have their salary reduced by 10% across the board. The rule is that you cannot reduce wages by more than 25%, or it's going to affect proportionately the amount of your loan that gets forgiven. So as long as you did not reduce your employees' wages by more than 25%, you'll see here at the bottom we have this. I have this start area. This came directly out of the front page of the PPP application, and it would allow you to just simply check this box and put a 0 on line 3, which is where that box 3 number drops to. Now, if you did have salary, there are safe harbors for both full-time equivalencies and for the salaries. Which this worksheet walks you through specifically how you can take advantage of those safe harbors. And again, there's the FTE reduction exceptions. This is very specific. Employees that were fired for cause, voluntarily resigned, or voluntarily requested a reduction in their hours. So, for example, we have an employee that was already planning to reduce her hours before all of this happened, and eventually ended up reducing her hours during the covered period. This was already planned in advance. She was doing this voluntarily, so we're not getting penalized by reducing 1/2 person full-time equivalency, and that number gets put here in the FTE reduction exceptions. So you're going to have to keep track of all of your employees, anybody that requested to have to not be at work full-time for some particular reason. And remember, as long as you get your full-time equivalency back up to where you were between February 15th and April 26th by June 30th, then you have an ultimate safe harbor. So no matter what, as long as you hire back by June 30th and you have the same number of employees, then you're going to be fine for the FTE safe harbor exceptions. So this looks a little fun. It's a little funky, but it does make sense if you follow along here. So as you see, box 1 of that Schedule A worksheet goes directly to line 1 on the schedule Oh, what do you know? There are no questions. Box 2, the average number of FTEs goes directly into line 2. Box 3, your salary reduction goes into line 3. Your highly compensated employees go to line 4 and 5. And where I have this box here from the borrower, this is data that as an example, we as a payroll service would not have. So we're not going to know, for example, what the borrower pays for the employee's portion of the health insurance premiums. So you're going to need to find that number. You're going to need to know the total amount of the employer paid portions for employee retirement plans. And then you're also going to need, well, we'll be able to tell you what the local and state taxes are, which is basically going to include for us state unemployment tax, because we don't have any other local taxes. Now, the last important part is the FTE reduction safe harbor. If you did have to fill out this bottom section, then you're going to put your reduction quotient on line 13. And remember, that's a bad thing. We don't want any kind of reduction quotient in those numbers, because that's going to reduce the amount of your loan that's potentially forgivable. Yes. Please define cash compensation. Is it gross wages or employee salary deposit after taxes are removed? No, it's gross wages. And it gets really complicated because as we're going to see, some of the documentation that the banks are going to be required to have, that you're going to have to provide to the bank, are copies of your 941s and D9s tax returns. So if, for example, you have a employer-based Section 125 pre-tax plan for your health insurance premiums, those numbers don't show up on the in the federal or state payroll tax returns. So it's going to be difficult for for us to explain to the client, and for the client to explain to the bank how all these numbers tie together. And we're anticipating we're going to have to build a worksheet to help explain all this stuff directly. Okay, so we got another question. Does the average FTE have to be expressed as a percentage, or can it be just the number of hours worked? All of our folks work varying hours and widely varying percentages of FTE. No, it's a ratio, so it's a percentage, which is why they simplified the FTE process to be either the actual percentage, which is 40, the number of hours actually worked divided by 40, or you either have a full-time employee, which is 40 hours, and anything less than that would be a 0.5 full-time equivalent. And it's going to be up to the borrower to determine which one of those is the most advantageous way to calculate your FTEs. So moving on to the calculation form, the required calculation form. These are some of the things that I found interesting. So you'll notice when you're filling these things out, this is going to look a lot like a tax return by the time we're all done. The basic stuff, business legal name, DBA, EIN, phone number, contact information. These are the things that I found interesting. You're going to need to know what your SBA PPP loan number was, what your lender's loan number was, what your PPP loan amount was, and the disbursement date. Then employees at the time of the loan application and employees at the time of the forgiveness application. So somebody asked the question, do you need to have the same number? Or when are we comparing the full-time equivalents to? So this employees at the time of your loan application is a complicating factor. Because you can use two different terms, my guess is you're going to have to use the same one that you use for your loan application for your measurement period for the loan forgiveness. You're also going to notice that they're asking specifically for your idle advance amount and their idle application number, and that's whether or not you receive the loan. That's if you, either the advance or the idle loan, and that's just strictly your application number. So they are tracking those very closely. Okay, also on this form in the next section, there's this handy box that says if you received a PPP loan in excess of $2 million, check this box. So what I'm hearing is that this is kind of, unless you got a loan that was worth more than $2 million, do not check this box. The language that I'm hearing is this essentially is this is what's going to trigger automatic audits by the SBA. And we know that SBA has said specifically they're going to audit everybody that got more than $2 million in PPP loans. So the inverse of that is this could be, some folks are saying that this is something similar to a get out of jail free card. In other words, it's going to potentially lower the requirement for audit by SBA. No, SBA does reserve the right to, you're going to see, they reserve the right to audit anybody for any reason. So let's just hope that that really does apply. And if you don't check the box, that you're less likely to get audited. So again, we have to keep in mind incurred versus paid. Sorry, I'm having to move my window around so I can actually see what my slides look like. Payroll costs are incurred on the day that the employee's pay is earned. If it's incurred and not paid during the last pay period of the cover period, you're still eligible for forgiveness as long as you pay it with the next regular payroll. So, and remember, this line 1 is both payroll and non-payroll costs. So that includes the local and state taxes, the employer's portion of the employee's health insurance premiums, and employer's portion of employee retirement plans. That all is included, that's all considered payroll and non-payroll costs. You're also going to want to make sure that you have available whatever your business mortgage interest payments would be, your rent or lease payments, and your business utility payments. And keep in mind that those are only for contracts that were in place on February 15th. So how does all that translate? Remember, we filled out the PPP worksheet first, and we translated that information over to the PPP Schedule A. Schedule A then numbers are moved over to the actual forgiveness application. And you'll see that box 9, which is your total compensation, which is your total payroll cost, goes into line 1. Your salary reduction goes into line number 5, and your FTE reduction goes into line 7. And the idea is we want to make sure that we want to minimize these two amounts, the salary reduction and the FTE reduction quotient. And the idea is we want to get to this bottom line with which your payroll cost divided by 0.75. You use the smaller of the loan, either the modified amount, the total loan amount, or your payroll cost divided by 0.75 for the amount that you can ask for forgiveness. Is workers, okay, so a bunch of people are throwing questions at me. So I'm gonna try to run through these as quickly as I can. So will you be discussing what specifically can be defined as utility? Yes, there is some guidance, but there's also some confusion. So we will talk about that. Is workers' comp considered a forgivable payroll cost? Not specifically. I have not seen anywhere that workers' comp insurance premiums are included as a payroll cost, which is kind of silly because it's a payroll cost. Or at least I think it's a payroll. It's a payroll. I think it's a payroll cost. We think that employees at time of applications and employees at time of forgiveness would be the full-time. Yes, would be the full-time equivalents. That's correct. But remember, we're not you have to play by the rules that were in place when the activity is occurring. So at the time that you did your loan forgiveness, we're going to want to look at that number and make sure that you've given them a full-time equivalent number and not just a regular full-time employee number. I hope that made sense. You're going to want to talk and work with your lender to make sure everybody's on the same page with these numbers. And I think I answered all the questions that were in the box. Okay. So we talked about the business mortgage interest, the lease payments, and business utility payments. Remember that as of right now, anyway, only 25% of those costs can be used, can be forgiven. So somebody asked about what are covered utility payments. they are distribution of electricity, gas, water, transportation, telephone, or internet service, internet access. And these are the ones that were specifically included in the language of the interim final rules and in the package, in the loan forgiveness application package. So the big question is about transportation. Somebody asked you yesterday about garbage, and to me, garbage makes sense, but it's not specifically called out, so I would not include it. Transportation has been wildly discussed. Yes, I will repeat these. So business payments for the distribution of electricity, gas, water, transportation, telephone, or internet access. And again, the big question is, what exactly is transportation? And that has not been defined. I think there has to be more clarity. So another person has asked, what about wages paid to a staffing company? Can those be included? Specifically, no. And the logic behind that is SBA, as part of the PPP loan application process, specifically spelled out the fact that 1099s are not included because they would be eligible to participate in the PPP loan program themselves. So if we're talking about a staffing company, the staffing company that puts employees at your place of work is the employer of record, and they would be eligible to apply for the PPP loan themselves, and therefore you cannot include them for forgiveness in your own loan. Somebody asked, does telephone include cell phones? I don't think it's been defined. At least I've not seen a definition, but to me, a cell phone is a telephone. So I would suggest that yes, probably. Okay. And remember I said too that the February 15th date of 2020, you must have had a rental agreement in place, or you must have a mortgage obligation in place before February 15th, 2020 for them to be eligible for forgiveness. Oh, here's a great question. Can payroll service fees be covered? Can they be included? No, at least not that I've seen. Another question, must utilities be paid by bank account to where the funds were deposited, or are credit card payments okay? We're going to get to the documentation side of this, but specifically, some of that is specifically called out. You just need bank records. And this is really just a picture of the form. And now we're into specific documentation that we need to give to the banks and documentation that we need to keep. So you'll see that you will need bank account statements or third-party payroll service provider reports documenting the cash compensation paid to employees. Now, again, this is going to be really tricky because if you're a weekly or biweekly payroll, it's going to be easier for you to report out the 56-day period that encompasses your covered period. If it's a semi-monthly payroll, it's just not going to. The timing doesn't work for anybody. I mean, we have two clients that, through just sheer luck, started their loan got funded on the day that their pay period started, randomly. So they're going to be in really good shape because, obviously the dates are going to line up. Everybody else, the only way that we can see that we're going to be able to do that is to calculate it. And we will, for our clients, be providing essentially, providing a report that essentially mirrors that worksheet A. So you'll be able to translate the information directly from that to the worksheet. And like I said, since there are only 8 lines or so for employees, you're going to have to include additional supplemental reporting regardless. We're actually going to take it a step further and provide, we're going to quote, flood the zone with reporting and provide not only the covered period reports, but reports for quarter to date and year to date. Now, they also say specifically that we need to provide payroll tax filings that will or have been reported to the IRS, which is typically the 941, and your state quarterly unemployment reports that are or will be reported to the state. So the problem with this is the timing is messed up. So in general, first of all, under the CCFFCRA, yeah, I think I got that right. The FFCRA, which created the paid sick leave and the emergency paid family medical leave. Those were both tax events and are so going to be reportable on the 941, which means that we have a new draft 941 that went from 2 pages to, I think the draft is 3 pages plus a worksheet and schedules. So I think it ends up being something like a total of 7 pages. I have it somewhere in front of me, but I haven't counted lately. Somewhere around 7 pages. So no matter what, we generally don't, as a payroll service, we normally don't get quarterly reports out until approximately halfway through. Oh yeah, I knew that was coming. Sorry, a question came in the chat window that I knew was coming while I was having this conversation. Anyway, we normally don't get 941s out until approximately the middle of July, or the middle of the month following the end of the quarter. So it's going to be, timing is going to matter, and it's looking like we're not going to be, nobody's going to really be able to start asking for forgiveness and turning in the apps until at least the middle of July, because we just won't have tax returns. They just won't be available. So the question that was in the chat room that's really kind of fascinating is, if I can open it up, do these rules apply to 943 employees? 943 is an annual report, and how is this going to be taken into account? We have no idea. So for anybody that isn't aware, 943 is for agricultural employers, and instead of filing 941s every quarter, you file one 943 at the end of the year. So we were actually having this conversation in our shop yesterday. We could provide, for example, a draft 943 to the bank that would only include the data for which we have, right? So let's say we go through July, you would get a partial 943 through July. Now it says payroll tax filing reported, or that will be reported to the IRS. What exactly does that mean? So even if we provided you with an interim or a draft 943, that is part of what would be reported to the IRS. So we don't really have it. We don't have a real answer for that, other than providing you with direct payroll reporting, which would be similar to the 943s and or the 941s. Does paid vacation qualify for wages if the employee elected to take it during the furlough? Yes, the wages are wages, and vacation is specifically called out as a form of compensation. Oh, and we have one last question that I missed. My understanding is that the employer's contribution of health care is forgivable. Is correct? Yes. So the employer portion of the employee's health insurance premiums is allowable for forgiveness. Is considered a payroll cost. Okay, so other documentation that we're going to provide to the bank will include payment receipts, canceled checks, account statements, any kind of documentation that you can provide that's going to show what the employer contributions to the employee health insurance plan, any retirement plans, any of those allowable expenses. You want to have as much backup as you possibly can have. Now, the last one is going to be your FTE calculation. Keep in mind that you have to be consistent when you're using the the FTE calculation. You can't use one method in one place and a different method in another place, and then you have to use the same date ranges. And I suspect that you're going to have to use the same range that you used on your original application. So you also need to have copies of things like lease agreements, your mortgage, your amortization schedule, canceled checks. You basically want to have as much backup as you can possibly have to prove that those costs should be included as allowable for forgiveness. So for example, under the business utility payments, copies of invoices from February 2020, canceled checks, account statements, etc. Now, this is where it gets really lots of fun too. documents that the borrower is required to maintain, but not required to be given to the bank. So you basically need to have everything, right? So you're going to have, for example, the full payroll report for the entire pay period, for the entire quarter covering your period. All your documentation that supports each individual employee in Schedule 2, in the worksheet. Specifically, you're going to show each employee's compensation to making sure that they did not make more than $100,000, or if they did make more than $100,000, that $15,385 cap is included in the second box in the worksheet. Very important that you have documentation regarding any employee's job offers or refusals, firing for cause, voluntary resignations, or written requests by an employee for reductions in work schedules. So those are the employees that either say, I don't want to come back to work because I'm making too much money on unemployment, or for whatever reasons, for health concerns, I'm just not comfortable going back to the workplace. And remember, you have to turn that back. You need to turn that into the state. Although I don't think in California that affects the employee. Here's the real kicker. So you also need to keep all records relating to your PPP loan, including your original docs that you submitted. And you need to keep all of this together for 6 years. And that's 6 years after the loan is forgiven or the loan is repaid in full. So remember that any amount that's not forgiven, there is no prepayment penalty. So if you have amounts left over that have not been forgiven and you don't need the cash, you can pay it off and there's no prepayment penalty. Otherwise, you're going to get rolled into that 18-month note at 1%. So the very last part of this is the PPP demographic information form. And like I said, I think this is important. I think it's going to be important for everybody to understand who got the money, who got the loans, and how they were distributed. And I think we're actually doing pretty good on time. I'm seeing some hands up, so I can't actually hear anybody. I can only see stuff in the chat room. So if you do have questions, please include them in the chat. So the question is, what if we signed a new office lease during the covered period? So the language specifically talks about lease agreements that were in place February 15th, 2020. So I think that's going to be complicated. I would guess that remember the incurred versus paid. I think, without knowing specifically, timing and issues, and remember, every client's different. So all this is individual to the specific borrower. But I would have to imagine that at the very least, a portion of your rent or lease agreement would be forgivable, even if you signed the lease after February 15th and moved into a different office. I hope that answers the question. I think I got all that straight. So if I only use 60% of my PPP loan and it is forgiven, I can return 20% without penalty. There is no prepayment penalty. So yeah, I mean, I've seen nothing to say otherwise that you can't pay the loan off early, which means, sure, you can just pay it off. Our landlord charges for common area maintenance, which equals about 1/3 of our monthly obligation. Does this qualify? Good question. My guess is yes. I have not seen any language specifically that deals with that, with common areas. But that's part of the documentation that you're going to provide both to the borrower and to the lender, and that you're going to keep on file. Boy, you guys are throwing out some really good questions at me today. This is fun. My guess is that's your common area maintenance is part of your overall lease agreement. So my guess is that, yes, that should be allowable. Okay, can I talk a little bit about self-employment rules? For example, does self-employment tax and sub-contributions qualify as payroll expenses? I am less versed on self-employed people because we're a payroll service and I deal with mostly people with employers, but I would say logically, I think that if you had been making regular sub contributions let's keep in mind, there are a couple of concepts that we have to remember. There's the $100,000 rule. So no matter what, if you're a Schedule C or Schedule K filer, your profit for the year, if it was more than $100,000, the most you can compensate yourself is $15,385 in the cover period. However, there is other language elsewhere that says that that $15,385 amount only applies to cash compensation and does not translate to things like retirement plan contributions, healthcare, etc. So my guess is that yes, if you have a regular contribution to a SEP, that it should be allowable. Self-employment tax. Remember that none of the federal tax is forgivable because we're using federal funds to pay our employees. We don't also get to forgive the tax money that we'd be paying the government for money that the government gave us. So it's basically 940 and 941 taxes are not allowable. FICA, Medicare, and FUTA are excluded from the loan forgiveness portion. It's only the state and local taxes. So I would guess that the state tax, which would be the self-employed person's portion of the equivalent state unemployment, should be allowable. But I'm just not familiar enough with self-employment tax to know even if you do pay unemployment. Okay, next question. If the 8-week period is extended, when will we know? Well, we'll know when the president signs the bill. What we won't know is there's going to, if all of those things happen that I discussed, changing the 56 days to 24 weeks. What was the other stuff that was in there? 8-week coverage to expanded to 24 weeks. Increasing the current limitation on the loan proceeds for non-payroll expenses from 25 to 40%, extending the program from June 30th to December 31st, extending the loan terms from 2 years to 5 years. So there's a lot of really good stuff in this legislation that was passed by the House. There are two things I can see happening here. One is SBA has already consistently said that you have to operate under the rules within which you're operating at the time that something occurred, right? So the rules that were when your loan was funded, you're subject to the rules of your loan as it was funded on that day. Which is a little contradictory because if you go strictly by what was in the CARES Act and not in the administrative guidance, administrative guidance changes the way we handle a whole bunch of different things. So I have a feeling that this may only apply to new loans, but I've not seen the language of the bill myself. It's possible that SBA will come out with guidance or Treasury will come out with guidance saying that we're going to extend this 8-week period out to 24 for everybody, and we're going to change the date from June 30th to December 31st for everybody, and we're going to change the ratio from 75-25 to 60-40. If that were to happen, it would make this extraordinarily complicated situation for all of us. So, my guess is the easy way out is for them to say this only applies to new loans. Okay, question is, when COVID-19 occurred, we came past due on March and April health insurance. When I pay for those months now that I have PPP funds, will the employee portion for those past months be forgivable? Okay, so your 56-day, remember we were talking about incurred versus paid. So if you're paying the bills in the cover period, you're gonna have to work with the bank. So, timing is gonna matter. Your March insurance bill probably will not be included because it's probably not part of your cover period. But your April, May, I would assume cover your May. So your health insurance premium, your health insurance bill always covers the following month. So you're paying it a month ahead of time. So I would guess when we sit down and analyze it that your April health insurance bill, which is for May, would be forgivable, and March is probably not. Okay, next question. How do we do an annual 401k match this amount was used in the calculation on our loan application for PPP. Is there some way to claim a prorated portion of the 401k match during the 8-week period? Well, yes. I mean, I'm guessing that there's some interaction here between your 401k plan document and the calculation of how you would figure out what your 401k match for that 56-day period would be, but I don't see why not. You know, there are many plans that make a 401k contribution at the end of the year. So, but it's based on the employee's contribution generally, unless it's a full safe harbor, and then it's just based on wages. So you should be able to calculate it and justify to the lender that yes, this 401k amount, this is the amount attributable to this 56-day period, even though, you know, we don't normally pay it until the end of the year. Now there may be some requirement. You know, we're getting into some minutia here, and again, everything is dependent on each individual client. Everybody's circumstances are different, but there may be a way for you to fund that 401k portion early. But again, that probably has plan document implications. Is a self-employed individual the same as a sole proprietor? Well, that depends. So a self-employed individual could be an LLC, or it could be a sole prop. At least I don't think I'm talking out of turn. That's a question for a CPA type. Okay, do you think transportation portion might be vehicle leases for companies? Yes, actually, I think that's probably what they're specifically referring to. But, you know, until we get more direct guidance from SBA, I wouldn't be sure. I've heard stuff like, I've heard some people say, give analysis saying that they think that gas for company fleets should be included as transportation, as a utility cost, maintenance, that kind of thing. So, but I would have to believe that as transportation is included as part of utilities, that lease agreements would specifically be included for forgiveness in that case. And I think I've covered all the questions that we've got out there. So, one last thing to talk about very quickly. If for some reason you're on this call and you did not receive a PPP loan, you may be eligible for what's called the Section 2301 Employee Retention Credit for employers subject to closure because of COVID-19. If you were affected, your operations were partially or fully suspended due to COVID-19, or your gross receipts are down by more than 50%, you can get a tax credit worth up to 50% of the first $10,000 worth of wages that you pay your employees. And there's a difference between whether you have 100 employees or less than 100 employees. Oh, somebody finally asked me, and I completely missed this. Last question, is the idle amount going to be deducted from any forgiven PPP amount? So yes, that is very specific. And it was very specific both in the idle, grant process, and it was also very specific in the PPP loan application process, that idle is not allowable for forgiveness. As a matter of fact, it gets deducted from the amount of forgivable. So here's the part that kind of worried me about this idle advance amount and the idle application number. There's very specific language in the interim final rules that say that SBA will deduct the amount of idle advances from the PPP loan forgiveness. So, and remember that the idle advance program changed radically. It was originally just a $10,000 grant. Then it was changed to $1,000 per employee, up to $10,000. Frankly, it was kind of a mess. But what worries me is that I want to make sure that employers don't get double dipped by the bank reducing the total forgiveness amount from the PPP loan based on this number of your idle advance amount. And then have this application turned into SBA, and then the SBA deducts the same amount from the loan forgiveness. It's something we're going to have to keep an eye on, because I could totally see that happening. The language in the interim final rules is very specific. saying that they will reduce the amount of the lender's recommendation by the idle amount. So that makes me kind of really wary about this idle advance amount that's on the very front of the loan. My guess is that you're going to have to communicate well with the bank and make sure that the bank is not reducing that amount to the loan, or that they're communicating to SBA that they already had reduced it. Okay, in the case of a seasonal employer, what months could we use for the FTE, and who determines? Oh, I'm sorry, I lost it. Who decides if you're a seasonal employer? Okay, I have to go back to try to find that particular slide to give you the dates. Oh, sorry, I went the wrong direction. I think the employer determines whether or not you're a seasonal employer. I have not heard anything else to say otherwise. There's technical definitions of what seasonal employer is as part of the ACA. They may rely on that language to also, but really that has to do with timing. It has less to do with actual whether or not you're a seasonal employer. Okay, so if you are a seasonal employer, you can use, everybody is eligible to use the February 15th, 2019 to June 30th, 2019 date. Or you can use January 1st, 2020 to February 29th, 2020. If you are a seasonal employer, you can use the May 1st to September 15th, 2019 date range. And it's contiguous 12 weeks in there. And remember that your full-time equivalencies need to be back up to where they were in the middle of all this by June 30th, 2020 to get that full safe harbor. Confirming the employer that the employer payroll tax contributions, Social Security, Medicare, unemployment insurance are forgivable. No, Social Security, Medicare, and FUTA specifically are not included in the allowable amount. Unemployment insurance is included under the state and local. So, and really for California, really what we're talking about is state unemployment insurance. Frankly, it's based on the first $7,000 worth of wages. It's going to be a very small number for most employers. Holy cow, now they're starting to come in hot and heavy. On page 3 of the 11-page document, they are asking for employee counts. Okay, so let me pick up page 3. Yes. So, so they're asking for the employee counts. Is that the total number of employees or is that the FTE? I don't know. There's no, I didn't see anything in the instructions that says specifically what they're looking for. Oh, wait a minute. Actually, I even have it highlighted. Employees at the time of the loan application, the language is enter the total number of employees at the time of the borrower's PPP loan application. So they want specifically the total number of employees. Employees at the time of the forgiveness application, enter the total number of employees at the time the borrower was applying for the application. So it's an actual employee count. And by the way, when we do that worksheet, we're going to include your not only your full-time equivalents done both ways, but we're also going to include the raw payroll, the raw number of employee counts. Okay, if we applied for idle but we've heard nothing, do we leave these fields blank? So remember that highlighted part where I said they are specifically asking for your idle application number. So if you have an idle application number that you, and if I remember correctly, they either start with a 2 or a 3, you're gonna put your idle application number on the front of that form. Can I clarify line 9 of the PPP Schedule A form? Line 9. Is this line only to be used by borrowers with no employees other than themselves or the owners? No, you could also, they could actually have employees. It could be both. So it could either be somebody who's just a self-employed self-employed person, it's just them, or it could be a sole prop with employees, and the owner's compensation can be included, but remember it's capped at $15,385. Let's see. Will you be willing to answer questions as they arise when we are calculating our forgiveness amounts? How are seasonal employers defined? And to the best of my knowledge, nobody has defined seasonal employers yet, but I'm guessing it's along the same tenet of if it looks like a duck and quacks like a duck, it's probably a duck. I'm sure that there's somewhere in here seasonal employers are defined, but again, I don't remember seeing it myself. So yes, I'm always willing to have a conversation with somebody. Keep in mind that, we're not going to have all the information, and everything keeps changing very quickly. So yeah, I'm happy to help. I'm happy to answer questions to the best of my ability, but you're going to definitely want to work with your lender. Please reconfirm, everyone can choose one of these two ways for two date ranges. Yes, for calculating FTE. So yes, you can either use the 215, or what's that? Am I going the wrong direction again? Key dates. Oh, I went the wrong direction, so I'm not going to go kill it. So yes, we're confirming that everybody can use those first two date ranges, and seasonal employers only can use the third date range. Okay, what is the process for our clients to get the info for the application from you and Payroll Masters? So it's a little premature. The very first loans that were funded, the first funding date I think was April 3rd. So some of those eight-week period is over, but I don't think that includes any of our clients. Nobody's specifically been asking for data yet. Oh, I take that back. We actually had a client request data saying that she had just finished today. So we were providing some reporting. The process is going to be call the processor and start talking to us, because it's going to, no matter what we do, there's going to be a lot of give and take. We're going to have to run basically 5 different scenarios for every client. Client's going to then have to do the analysis to figure out which FTE calculation is best for the client, and make sure that the wages are all, that 75-25% margin has been met. You're not reducing employees' wages. Once you've done that, then we'll rerun everything using the correct dates. We're going to give you the equivalent of that worksheet A in a report. So it'll have an employee's name, last four of their social, total gross wages for the 56-day period, their FTE, both as a raw number, meaning number of hours divided by 40, and the half-time equivalent. So everybody that's a regular full-time 40-hour employee is a 1, everybody else is a 0.5. Yeah, so all of that information is going to be in one place. We'll also be providing backup payroll reporting for all those periods, but really it's going to be important for both the client and the processor to talk. We're going to have to know, it's the same thing as that we always try to say, what is it that we're trying to accomplish, right? So you tell us where we're trying to go and we'll get you there. Okay, I think I got through all the questions, and it looks like we're about 15 minutes early. Oh, I got one more. At what point during the 56-day period should we consider paying a bonus or extra hazard pay so that we arrive at the 75%? Well, I honestly can't really answer that for you, although I will say that bonuses or hazard pay are allowable. So you'll have to look at when your 56-day period begins and ends. And if you want to make sure that you're hitting that number, you know, again, keep in mind what I'm considering basics are reasonable and customary. You don't want to just go out and, you know, bonus somebody $5,000 just for the heck of it because you like them. So to answer your question, I would do it within the 56 days, I guess. Sorry, that was not much of a, it wasn't a very good answer, but. And now I think, Valerie, unless you're seeing somebody asking something that I'm missing, I think we actually got through this.
Yeah, I believe you got through it. We still have Wood Specialties that has their hand raised, so I'm going to unmute him right now just in case he'd like to, or he or she, I'm not sure if it's a female or a male, would like to say something. So
sure.
I'm going to unmute now, and then if he would like to, if Wood Specialties would like to speak, then they're welcome to take the floor. It looks as if they no longer have a question. So I think with that said, did you complete all the information that you needed to, Paul?
Yeah, we got through my deck. We have one last question just to confirm even, oh, hold on, I lost the question.
I think it was just a thank you.
No, just to confirm, even if you arrive at the 75% cost, if your FTEs are down, your forgiveness will be reduced. That is correct. So the whole idea is to maximize the amount of your full-time equivalencies on the end of this, at the backside of this by June 30th. You want to have your full-time equivalents up to where you were in that February 15th date range. And it may not be possible because some employees may say, you know, no, I'm not coming back to work. In which case, they go into that second box and they don't get held against you. And I'm still scrolling through, making sure I got everything.
Seems like we just have a bunch of thank yous. I'm just going to chime in one last minute. If you did not register prior to attending this event, please put your email address into the comments. That way I can send you out the slide presentations and the recorded version of this presentation either today or tomorrow morning. So if you could just make sure that you put it in the comments. If you're not comfortable sharing it publicly, you can just send it to me privately. Just hit under Valerie and send it over, and then I'll enter you into the system. Thank you so much for everybody that attended. We really appreciate you coming out today, and I'm glad to know that we're putting together presentations that are very valuable to the members and to the business community here in town. So thank you, everybody who attended today. We greatly appreciate that.
So Val, we got actually more questions coming in.
Okay, go ahead.
Might as well leave it open for as long as anybody wants to keep throwing stuff at me.
I agree, 100%.
So, I mean, I'm in no hurry. So, the question was, new hires during the PPP period are acceptable. Not only are they acceptable, it's encouraged. So, you know, remember the intent of this whole thing is to keep people on payroll. They wanted everybody to keep getting paid. So the more employees you have, also, I think another way to answer that question is that if your full-time equivalency count is down, and for example, your employees won't come back to work, there is no prohibition against you hiring other people and counting them as full-time employees, right? Or some proportionate amount of full-time employees. Okay, so now we're getting into some real questions, some really interesting question. If we use up the PPP money and cannot afford to keep our full-time employees the same on June 30th, what happens then? Well, so June 30th is a hard, safe harbor. Your covered period is the covered period. So I think the way that that's going to play is that as long as you kept your full-time equivalents during your covered period, I think that it would be forgivable. I don't know that they're going to actually come back later and say, give me a snapshot of where you were on June 30th. That seems rather impractical to me. Our employees are salaried. Do we still calculate FTE? Okay, so there's two answers to that. In general, under the ACA, your salaried employees are considered full-time equivalent, right? One full-time equivalent. So that's a basic tenet in that we operate under that. So in general, a salary, actually, let's define some terms here. By salaried, I'm assuming that you mean exempt employees, salaried exempt employees. So me, right? I'm vice president of the company. I get paid for the year. I don't get paid for a pay period. So my salary is really my annual salary divided by the number of times we get paid. So it doesn't matter if it takes me, 10 hours to do 10 hours a week to do my job, or if it takes me 80 hours a week to do my job, I'm paid to do the job. So I consider exempt employees regular, just automatically a one full-time equivalent. I missed a question. Can we hire somebody to fill this out? Can you please advise? Well, yeah, I mean, there's nothing to stop you from hiring somebody to help you fill this out. I have not specifically heard. Oh, you're welcome, and I hope that answers the question. But before I get to this, I want to get back to the second part of that salary question. There was earlier guidance that specifically said that you can use dollar amounts. You can calculate dollar amounts to calculate full-time equivalents. So if you have regular salaried employees and their salary has not changed at all, then that's a regular full-time equivalent. However, if their salary fluctuates, then they could go up or down. See what I'm saying? It didn't make a whole lot of sense to me the first time I heard it, because generally, salary exempt employees are just a full-time employee. But there are a couple of places where that makes sense. For example, we have a client that gets paid by performances, by the number of performances that each person does. There's a bunch of rules about that, how you go about doing it, make sure it's legal and all that kind of stuff. But it's legit. So how do you figure out what that employee's full-time equivalency is? Well, they're actually going to figure out, they're going to divide it out backwards, divide their way backwards into what their full-time equivalent is. So it's possible to do it that way, but in general, I think the easy answer is a salary exempt employee is always one full-time equivalent. Okay, so our exempt employees are expected to work 30 hours per week, so we always call them 0.75 FTEs. Benefits accrue at 0.75, which is perfectly fine. I mean, in our circumstance, we have a 37.5-hour work week, and we just consider it a 40-hour week. So as long as, if you want to consider them a 0.75 FTE and you're proportionately calculating all your other FTEs, then your FTE numbers are going to be fine, right? So presumably you use that 0.75 FTE for your loan application, and you're using it from the very beginning for your covered period. So as long as you stay consistent throughout the whole thing, your FTE should stay right about the same. It shouldn't matter. It doesn't matter. The number of full-time equivalents doesn't matter. What matters is the difference between your beginning and end full-time equivalents. You're welcome. Whew. Alrighty. Well, I think that takes care of everybody so far. It's funny when we have everybody muted, and I'm the only person I can see is Valerie, so I get like zero feedback.
Would you like me to unmute everybody?
Sure. Let's turn it into a free-for-all.
All right, let's go for it. Should unmute.
Thank you. It's great.
You should be able to unmute yourself now if you'd have a question or you'd like to chime in with.
Thank you so much. This was wonderful. Thank you, Paul. Julie,
I have
home.
This is Amy. I have a quick question.
Yeah, go ahead, Amy.
As I understand it, there's some things that, we're a little bit unsure of whether it is forgivable. If we pay something and we find out it isn't forgivable, it'll just turn into a loan, or does that like negate everything? You know, like,
He's on mute.
Is he on mute also? Okay, let me unmute Paul, or see if I can unmute.
Mute myself.
There you go.
Okay, am I unmuted? Okay. Okay,
Does that
so
make
no.
sense?
Yeah, it totally makes sense, but no, that's not the way it works. That was a fear for some amount of time that you know, but it's contradictory to the legislative intent, right? The intent of Congress was that they wanted everybody to keep their employees paid, and they wanted this money to be forgivable.
Right.
So the short answer is no, that's not the way it works. Any amount that's not forgiven gets rolled into a 1% note, a 1% 2-year note that's amortized over 18 months, and the payments are automatically deferred for the first 6 months. Okay, so in all likelihood, because of timing, everybody's going to end up making some payments on these loans before they get forgiven. Now, keep in mind that under the interim final rules, they specifically said the bank has to give you the money back, and they have to give it back with interest. So it's going to be in the bank's best interest to do this as quickly as possible. The flip side of that is the banks have the same uncertainty as we have, right? So the rules are changing on them. It's funny. I was talking to one of my banker friends right before we got on this call, and she was saying that they had done a presentation yesterday that created, or they participated in an SBA presentation that created more questions than they answered.
Sure.
So everybody's going to be in the same boat until we get all this stuff figured out. I think that there's not I don't think they have a huge sense of urgency to be pushing out all this additional guidance, because they're looking at the calendar and saying, well, you know, the likelihood of a whole bunch of applications coming in for forgiveness is relatively low, because we know most of the loans didn't even go out until, you know, middle of March. So middle of March, early April, or March, April, May, middle of April or early May.
Yeah,
Sorry,
we got ours
timing.
May, beginning of May.
Yeah. So 2 months puts you in the middle of July, you know, and I think the other kicker is going to be waiting for the 941s and the DE9s. You know, no matter what, we're going to have to do programming to be able to even create the 941s.
So I'm almost thinking that it's better that we pay. What I'm doing is we put all our money into a separate account, and as we pay these bills that we think are forgivable, we transfer the money to our regular checking. And I'm thinking that if we're not sure if it's forgivable or not, it's probably better to pay it because maybe it is forgivable. And then if we find out it isn't, then we just have to pay it. It becomes a loan. I don't know. It's like one of those, you know, we want to make sure we use it.
Right. So the whole bank account thing, by the way, the whole bank account thing is irrelevant. It doesn't matter where the money lives. The only reason that's going to come in handy for you is if you're able to provide checks all out of the same checking account. You know what I mean? Make just easier paper trail.
Okay. Yeah, we transfer exact amount from one account to the other as we pay something. So. Right.
So there's no, like in the documents that we're talking about, you know, remember all the stuff that they're asking for: bank account records, canceled checks, you know, itemized statements, blah, blah, blah. So having a separate account certainly can't hurt you. It's just not something it's not discussed anywhere as a, you know, nobody came out and said specifically, yeah, you got to have a separate bank account. It's really accounting for the expenses appropriately and making sure that the money that you're spending is allowable, or the uses that you're using the money for are allowable for forgiveness. Put it that way. So as long as you're using the money, you know, so part of the reason why they're having to change this, why they passed this law today, was because they figured out that 8-week time period just doesn't work for the restaurant industry, for hospitality industry.
Yeah.
The hotels aren't open. So how in the heck are you going to keep your employees on payroll? I mean, it just doesn't make any sense. So, you know, I appreciate the fact that the House passed this bill, and I'm hoping that they make it retroactive and say, okay, everybody, you know, there were rumors that they were threatening to make that just industry specific, which wouldn't break my heart either if they just said, okay, if you're a hospitality or a restaurant industry, then this now 24-week opportunity that you have is retroactive to the date you got funded. I think that would be spectacular. Yeah. It also makes sense, so it's never going to happen. You know, I mean,
Yeah.
it's just the way it works.
Okay.
But you never know. You never know. Yeah, Heidi, hi.
Hi. So I'm owner of Literary Wines. Hi, Paul. Nice to meet you.
You too.
So I just wanted to say, when we did our payroll calculation for the loan application, of course, we used all of the 2019 payroll numbers. While as a seasonal employer of a winery, the largest amount of payroll is paid out that last quarter of the year because of harvest costs.
Yep.
And we're a very small winery, but it ended up that we had 83 W-2s. And in going through this whole process of trying to figure out the forgiveness amount, I've been really caught up in how are we going to get to that 75%. And I don't think we're going to make it because most of our payroll is paid out that last quarter of the calendar year. And my husband reminded me that regardless of whether or not we qualify for forgiveness, which of course is the goal, it is a really, really cheap loan, no matter how you slice it.
Oh yeah. Well, the only caveat to that is it's as it stands, it's a 2-year loan amortized over 18 months. So it's good. It's a 1% loan, which is great.
Yeah.
But you're amortizing 2 years over 18 months, so it's not fantastic.
It's not fantastic, no.
It's not a bad deal, but it's just not, it's not all that fantastic. Now there are, well, anyway. There's also, remember, there's no prepayment penalty either. So if your cash flow is good and you don't need to worry about carrying an extra loan, don't carry it.
Yeah,
You know?
well, you know, if our income has been slaughtered by 75 to 85%, I don't see us being able to prepay. So,
Raise your hand.
anyway,
Well,
thank
hopefully,
you, Paul.
oh, you're welcome. Hi.
Hey, Paul, I was the one that asked the question about the, if we ran out of the money. We were figuring on the 7th and 8th week. We have money left for the payroll, but it won't be enough to pay the whole payroll. So what do we do in that case? Do we choose and pick who we pick or who we're gonna pay, or we just don't pay that pay period and give that money back?
Well, I mean, it depends. Do you have people working?
Well, no, but they're not gonna.
Okay, so you're just paying people to stay home?
Yes. Yes.
Then I would, out of fairness, I think I would probably come up with some solution like you're going to proportionately pay everybody what's left.
Okay.
Just out of fairness, you know, you want to keep it consistent and you don't want to discriminate against anybody. You know, you don't want to pick favorites.
Right. And you know, unemployment did let them keep their unemployment. They just reduced it.
Oh, did they?
Yeah.
Well, that's cool. I can't keep up with the unemployment stuff. It's just, you know, it's not our purview. You know, it's just not. And things have changed so fast and so often that I just can't keep it straight in my head.
Okay. And one of the things that are you guys going to try to keep us up on updates on all this?
Oh, I'm keeping up as fast as I can.
Okay.
Paul, this is Julie, Mission Funeral Home. Love you guys.
Hi, Julie.
Question, because hi. I'm not quite grasping. Okay, my employees, we have a 37.5 work week, and I know you've gone through this, and my head is thick. But you know, and I can write off 25% of my mortgage. Does that mean?
We lost you, Julie.
Changed. I was able to start the very day after I got my funding on this, so I should be. Huh?
I lost you for a second. Go ahead.
I got my funding. I got my funding on the day before payroll, so I was able to start immediately, which is great. Okay.
Perfect. Yep.
And but what I'm wondering, so there's 37.5, and I heard you talking about a 40-hour work week. They don't have to work 40 hours, right? But they do sometimes.
No, that's correct.
They don't have to.
So,
And then
so we do the same thing, Julie. Our work week is, we have a 37.5-hour work week that we pay 40 hours for.
the mortgage, right?
So you can use up to 25% of your loan money for your mortgage interest.
What's that again? I lost.
Okay. You can use 25% of the funds for mortgage interest for non-payroll cost and non-payroll related costs.
Great. And so I can potentially use up all the money, even if I'm at just 37.5. It doesn't matter that I'm at 37.5 hours?
No, the hours don't matter.
Oh, okay. Okay, thank you.
So because you're going to be consistent. If your schedule is the 37.5-hour week, then you have regular 9.94. Your full-time equivalents are 0.94. So as long as you're consistent through the whole thing, it's fine.
Oh, okay. Wonderful. Wonderful. That's what and then there's overtime too and all that stuff. Okay, good.
Yeah, well, overtime, you know, so the technical calculation is, well, you could do it two ways. If you wanted to, you could just say everybody is one half-time employee because they changed the rules. Instead, if you're less than 40, then you can be at half-time. So, you know, you're going to have remember that line 9 on the front page, you're going to have, you know, however many number of employees at 10 regular employees. But when you do the full-time calculations, you're only going to have 5. And as long as you're consistent across the entire document, then you're in good shape. The whole idea is you just need to make sure that your full-time equivalents go back up to where they were before the world caught on fire by June 30th. Does that make sense?
I have to do what?
You just need to make sure that you keep the same number of people on payroll.
Yes. Yes, definitely. Okay.
Chris, do you have another question?
You just answered it. Our thing was if we had people that decided, okay, we won't be in that last pay period, we'll just go ahead and collect our full unemployment. You know, but we have to, every pay period have to have the same amount of employees. We're just going to have to divide it up equally, like you had said.
I think I would.
Yeah, because we're probably phase 4.
Yeah, we're not sure what phase we're going to be, but it's late 3.
You're probably phase 4.
Yeah.
In all likelihood. I mean, yeah. which is totally wild because, you know, the way I look, well, I mean, they changed the rules. Now apparently they don't even need to test for that, which doesn't make any sense to me at all. And frankly, I consider you an essential business.
Yeah.
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 Are you going to hold anything on bankruptcies?
I'm not a lawyer.
Seems like it'd be easier to go bankrupt than to fill out this application.
You know, it's a lot, and I went really fast. But
no, but if you said it in English, because I didn't understand that language you were talking, but if it was like a snail in English. I know I was going fast, but you know, it's just so much information. There's so much.
We appreciate you.
Yeah. Oh,
so actually, yeah, go ahead.
Hard.
We appreciate you guys.
Thank you.
Thank you. And hopefully we'll be talking soon.
Julie, did you have another question?
No, that was it. I feel so stupid right now. You know, it's just one of those things that I'm kind of shy, but yeah, it's just as long as it sounds like what you're saying is as long as everything was the same as when I applied, I should be okay. And that's exactly same employees, same everything.
Yeah. So you're going to be in good shape. You're going to be fine.
Okay. Thanks.
Okay. So there was another question that popped up in our window. So we were funded on a Monday. Friday of that week, we ran our weekly payroll. On the following Friday, we ran our weekly and bi-weekly payroll. What date would I use? That's something I would want to analyze. I would want to actually see everything. So in general, I'm guessing you're probably going to use your funding date as the covered period, because unless your pay period started on that Monday and you got paid on Friday. So it's going to depend what how your pay periods line up. I hope that makes sense. But so the fundamental problem with all this stuff is that, for everything we do is based on check date by law. So pay periods are really kind of meaningless to us. We're required to have them and all that kind of stuff, but all the data is stored by check date. So we knew that there was going to be a real problem with the way the language in the bill and the language in the rules was coming out, because they keep talking about periods and they're not talking about check date. They dealt with that. Our industry was very proactive in trying to helping to explain to the legislatures how payroll actually works. So we at least got language in there that says, if your 56-day period, if you incur costs during your 56-day pay period that don't get paid until the immediate check date following the end of your covered period, then you can include that check date in your covered period's expenses. So there's no real easy way for me to answer that question, unless I can analyze what your pay periods are, how they line up, and how you want to line them up to match with when you got funded. Oh, hi, Diane. Okay, I was funded in the middle of a pay period. Can we use 50% for the first payroll? Yeah, you can use that. You can use your covered period as the day you got funded, or you can use immediately the first day of the pay period immediately following when the date was that you got funded. Man, I hope that word salad came out right. Yeah, does that make sense?
It does.
So Diane, I think you can do both. I think you can do either. It's going to be entirely up to you and the best way to do the analysis. Employer portion of Social Security and Medicare are not included in yes, that is correct. Employer portion of Social Security and Medicare and FUTA are not included in the forgivable cost. Specifically, I don't remember the exact language in the CARES Act, but it refers specifically to 941 taxes. Actually, it refers to the section of the IRC, which is even more fun because I had to go figure out what in the heck that meant.
Oh, Paul, one more question. Is this going to, if it is forgiven, it's taxable, right? We got to put it on our taxes.
Oh, so no, it's not. Well, according to the CARES Act, it's not. However, the IRS came out with a notice a couple of weeks ago that says the amount that you pay for expenses that is paid for by the federal government is not deductible for taxes. So what does that mean? It effectively means that the amount of your employee's payroll that we would normally just get expensed is no longer expensable, which means it would be taxable income to you. There's lots of outcry about that. Everybody is all up in arms about it. So I imagine that's going to change. But now we're into tax stuff that I'm not a CPA. So I don't want to get, I don't want to get too much in depth. I don't want to go any deeper than that, but just know that as of right now, there is a taxable event as I see it in my non-CPA capacity.
Because it's like if somebody goes bad on a credit card, they send you a note and you've got to put that as part of your income, So yeah, it's the same thing right now. Okay, good.
For right now, this is all, and keep in mind, all of this is subject to change. They could change it on me. They might have changed it on me while we were talking, for all I know.
Sure.
All right, so I think we covered everything. I'm kind of bummed that Wood Specialties didn't pipe in and ask whatever question they had a hand up like the whole time. Oh.
Maybe you already answered his question.
Could be. All right. Well,
Bye.
it looks like bye-bye, Julie. It looks like we covered everything.
I think so. Thank you so much, Paul. I appreciate all your great input, and you're very knowledgeable on this, and we're really thankful to have you here at the chamber.
Oh, thank you. All right. Take care, everybody.
Bye.
Bye-bye.